Hi, and welcome again to another edition of Market Analysis for today, May 1st of 2025. I'm Gio Benacourt, and this is a recording done right about 50 minutes prior to the open session of the U.S. So, investors book easily these days. The stock market survived another major scare yesterday and has since emerged with renewed strength thanks to Microsoft and Meta earnings. But with investors hung up on the economy and tariffs, there could be more frights around the corner. The S&P 500 has gained for 7 consecutive days, rising 8% over that time, its biggest 7-day jump since November 2020. Now, it seemed as though weak economic data were going to snap the index streak yesterday. The U.S. economy unexpectedly shrank in the first quarter. Private sector jobs numbers also disappointed the market, and the S&P 500 fell around 2% to start the day. But the GDP contraction was mostly driven by a surge in imports as companies tried to get ahead of tariffs. Consumer spending also held up, rising 1.8%. And when the Federal Reserve preferred inflation metric core PCE came in flat for March, the comeback was on for stocks. The rallies took another leg higher earlier today, following strong earnings after the bell from two of the so-called Magnificent Seven mega-cap companies, Microsoft and Meta. The big tech giants both doubled down on hefty capex spending, reigniting confidence in the artificial intelligence growth story. Initial unemployment claims posted an unexpected increase last week in a potential trouble sign for the wobbling U.S. economy. First-time filings for unemployment insurance totaled 241,000 for the week of ending of April 26, up 18,000 from the prior period and higher than the Dow Jones estimate for 225,000. Tomorrow's non-farm payrolls will have an impact in volatility. Consensus is for 130,000 added jobs. Anything short of this can spark a selling frenzy across the markets. Now let's take a look at what we can come in and speculate for today's market fluctuation. Well, we've seen that rally yesterday. The market did fluctuate after the GDP number coming out into the red, but quickly it recovered and closed in the green. And today we're seeing that momentum rising. So I'm going to use the top Bollinger Band as one of my levels of resistance, and the first level of resistance I'm going to use is 20,100-ish. 100. Good. There we have it. Now, the 50-day moving average is just cross or horizontal. So I'm going to use that as a probable level of support. And then my second level of support, I'm going to use a psychological round value, 19,400. There you go. Around that level. All right, and so therefore looking for the momentum to continue, even though the asset did open up with a big gap down. This candle opened at 19,828, and this one closed at 19,841. So there's a little bit of a gap in there, but it has been closed. Obviously, a momentum is rising. So let's see if at the open of the United States we will fluctuate above that 20,000 again. We have done so during the London session. So let's take a look at the S&P 500. And we're seeing how the S&P 500 has also rallied. The same scenario as yesterday. It did fluctuate all the way down to our level of support, and from there it rebounded. That's why I like that 54.50. It gives us that psychological reassurance. I just like doing that. 55.60, our first level of support, and then I'm going to use basically another level. I'm going to actually use a swing low, this swing low, which is almost close to the 55.20 marker. So I'm going to use that. Now, resistance, again, the upper Bollinger Band, and the first one, 56.80-ish. There you go. All right, so again, momentum to upside. Now we're going to be having the other two, which are going to be Apple and also Amazon after the close. They're going to be posting. So If they come out positive, even though Apple is facing some lawsuit in the United States, but let's see what happens. All right, so Dow Jones Industrial looking sharp to close on 8th consecutive day. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. All right, so it'll be our it's 7th consecutive day in the green. So I'm going to use the top Bollinger Band and the 50-day moving average as powerful levels of resistance. As far as support, 40,600, first level of support. And the second one, I'm going to use basically this candle's low, or the open actually. So let's see. Again, consensus or the market fluctuation to the upside is being favored. All right, so we have now crude oil. Now, crude oil it seems, no, so there's good news on the global front and potentially bad news for crude oil. The United States and Ukraine are reported to finalize a landmark critical minerals agreement, and the asset closed, the month with a third consecutive session lower. So that's something that we need to obviously keep in check, keep on our radar. Now, we will see, because of this, we will see more of a fluctuation to a lower towards the $50 barrel by the end of this month. That could be the case, but let's take a look at today's market fluctuation. So we did fluctuate earlier, lower, towards the $56. So that's going to be our first level of support. And our second one, I'm going to use just half of that. Let's see, 56, 55 and a half as our second resistance and levels. So far, I'm going to use the same ones that I have here, 59 and 59 and a half. So let's see. So momentum is to the downside, even though it has fluctuated nicely or recover from that. And let's just see if that'll be just another reason to move lower, or will it stay above the lower Bollinger Band and try to work its way higher? It has so during the London session, so it did fluctuate back above 58. So we could perhaps speculate that it's going to happen earlier. Now, Nat Gas is basically flattish, but within range. It did pick, it hit above. It has created a double top, so therefore, even though actually I'm going to leave it as is, because the 20-day moving average is sitting right above that. Is above, by that double top that is created with this wicks. So let's just go with the flow. Perhaps another leg up on Nat Gas, or we'll see just basically another sell-off coming down towards the $3 marker for today. Then gold. Let's take a look at gold. So gold is the breakout. I was favoring it to the upside, and it actually just is fluctuating lower. It has right now the 20-day moving average, or the medium in the Bollinger Band, is acting as a level of dynamic resistance since it's right below that. So I'm going to use 3160 as my first level of support, because 3200, you know what? Let's use 3200 instead as my first level of support. 3200, it did came down towards it today. So let's see if it'll happen again. Then let's take a look at 3320 resistance, and I'm gonna use basically this quadruple, quintuple top, if you will. There's no such thing in technical analysis, but I'm just calling it like that because it's like 1, 2, 3, 4, 5 times that the market has come towards this level and it's been rejected. It fluctuated twice, but actually this is a bit higher. But anyhow, that's a strong level of resistance for the asset. So I'm looking for a continuation lower on gold. Let's see if that's the case. Again, the 20-day moving average is right above the market, so that's gonna be acting as a dynamic level of resistance. You know what? I'm gonna change something here. 3,300 is gonna be our first level of resistance. And then I'm going to leave that triple top, quadruple top as a probable level of second level of resistance. Silver, so the metals indeed are tracing. It did have a swing, a very strong swing low. So I'm going to use 31.5, and then that swing low today, again, another level of support. $33 as our probable first level of resistance. The 50-day moving average is right above the market, so that's going to be our dynamic level of resistance. And I'm just going to leave 33.5 as is. Then let's take a look at copper. So copper is looking to recover some of its ground. Let's see if that's the case. We need to obviously fluctuate above our mediums, 50-day moving average and the medium in that perspective. In that perspective, so that's our first level of resistance, and then 480, our second level of resistance. So let's see, moving higher. Okay, so Bitcoin seems to be looking to make a breakout. I'm gonna use the top Bollinger Band as my first level of resistance, which is basically sitting right below 100,000 psychological value. So 100,100-ish, our second level. I'm going to leave the same level of support for it. I'm actually going to bring down to the medium, the second one. We're looking for a breakout. It's basically doing that so far. They say how much more will it rise? So going with the trend, buying. Then we have the currencies. The euro is losing ground, 114. So I'm going to use the 20-day moving average or the medium and the Bollinger Bands as my first level of support. And then my second level, I'm going to use 112,400-ish right there. Bringing down support to be 114-ish, 114. And then the second one is going to be that double top here. Very tight spreads on that. Let's see if we'll see another leg down, or will the euro recover, or will it just stay trading sideways? Then we have here the pound. So pound has a rebound of our levels of resistance, our level of support that we have placed yesterday. So today I'm gonna use a previous swing low, which actually is just doing the same. So I'm gonna use this particular almost double bottom here, and then the medium as my second level, bringing down 134 as my first level of resistance, and then this double top here as my second. Let's see if that will be the case. Now, dollar index looks mighty strong after this news of the jobless claims. Let's see if it'll sustain itself around these levels, or will it tank? I'm going to speculate that it's going to sustain itself around 99.5. So that's it for me today. Have a great trading day, and I'll see you tomorrow.